Sorry about that, guys. What's going on, guys? What's going on, guys? Sorry about the inconvenience there. Back on YouTube here. Should be good to go. Okay, what's going on? Hopefully this should be all good now. Everyone can hear? Awesome, awesome. I'll jump right into it. Let's give everyone 30 seconds here. Appreciate it. Sorry for the audio delays here. Apologize. I did some downloads for the streaming service here, and looks like it sort of knocked me out, so I had to do some fine-tuning here. It looks like someone helped me out, one of my friends, so that was good. Awesome. Just give me a second. Awesome, awesome, awesome. Awesome, awesome. Okay, just give everyone another minute or two to log in, guys, and we'll get started. Hopefully the mic check, everything's good. Okay, just quickly disconnect. Hey guys, live on YouTube now. We're switching back. Apologize for the inconvenience again. I had to fix an audio bug. We're going live on the YouTube link. Just see it in server. I had a friend help me out. Thanks so much. Sorry about that. We'll get right into it. Appreciate it. Spud Zone on YouTube. Spud Zone official YouTube. Thanks, guys. Awesome, awesome, awesome. Let's let everyone sort of connect in here and we'll get right started. Awesome. What's going on, JC, Robbie, March, Jeffrey, Mike, Joshua, J. Bean, Stephanie, Money Monster, Jeep for Life. What's going on? Awesome, awesome. Okay. So it sounds like everyone can hear me now. Cool. So since we got everyone sort of jumping on here, awesome. Hey, Mayo. Everyone's coming in now. Excellent. Just give everyone a second. Sorry for... Let's just quickly post. Had audio issues. Starting now. Excellent. Excellent. Awesome. Cool. Let's jump into it, guys. First off, Spud from Spud Zone. Not a financial advisor. I trade strict on my own money, and I retail. I trade off technical analysis, market analysis, macro and micro. Obviously, you have your own risk management. I post my trade ideas and what I'm looking at and what I'm seeing in the markets based on price action and analysis. So hopefully you guys have had a good trading the last couple of weeks. I unfortunately have not. Been on the wrong side of the trade for the most part. Been mostly short / sideways most of the year, so I missed out on a lot of this craziness and these runs to the upside. Wasn't positioned or ready for a lot of this sort of crazy price action. I think there was a lot of people caught off guards, a lot of people sort of getting wrecked on the short side / being out of the market. Saw a lot of FOMOing and buying on the last couple weeks, especially in tech, specifically the last couple days. Tons to cover this week, guys. The topics for today, we got the Fed FOMC Wednesday, right? Looks like market's pricing in 90-95% chance that Powell and FOMC are going to do 25 bips. So that's going to be quite interesting to see what he does. But then I want to look at the index technical analysis, because since the last time I posted last week and the week before, charts actually sort of breaking over the 200 MAs, and we haven't been over the 200 moving average in probably over 8 to 12 months, guys, on the indexes, specifically the S&P 500. So quite an interesting move here. Had some a lot of this ChatGPT or the AI theme, a lot of momentum names, a lot of these names down 70, 80, 90%, sort of just popping out of the blue on some major volume. I'm going to talk through some of that stuff, as well as the BuzzFeed Meta thing. And then we have tons and tons of earnings coming up this week. Gonna walk through some big earnings that I'm watching. potentially some technical levels where I think stocks can go, and I'm going to give some ranges based on the technicals. There could be a couple names you might want to play maybe some strangles on from options. If you've been buying the dip over the last 10, 12 months, you're probably up pretty nicely on a lot of U.S. equities, even Hong Kong ADR equities. You got a ton of stuff over there flying. But specifically for earnings this week, I think there's some opportunity maybe for some profit taking, as well as maybe some hedge positions I'm going to be looking into. And then sort of how I'm looking to execute / trade my plan, because I think this week's going to be choppy, but I think it's also going to be crazy. I think there's going to be a lot of crazy repositioning. I think there's going to be a lot of profit taking. I think there's going to be a lot of new positions, a lot of new shorts, a lot of new buys. There's going to be a lot of everything back and forth. And I think we're at just a really key pivot point on the charts. So I'm going to talk through all of that, where I think bears and bulls are really going to start pressing. And sort of that's where I think we're at. So I want to jump into, let's start with the topical coverage. So the first topic we're going to start with is Fed and FOMC. First off, obviously interest rates have, almost basically doubled from where we were about 12 to 14, 15 months ago. You're seeing T-bills start to fly up, and some really, really awesome opportunities in fixed income. We haven't had opportunities in fixed income in over probably a decade or two, since maybe 2008, 2007, 2006 zones, a little bit in 2012. So it's been about 10, 15 years since really people were able to net 4 or 5% basically on a 2-year guaranteed backed security by the U.S. government. So, those have been seen outstanding inflows over the last 6 to 8 months. Tons and tons of big money flying into those because, it's safe and you could get that kind of return, right? If the S&P averages return, 7 to 10% a year, and you could get 4 or 5%, potentially, and in some money markets, you get 7, 8%. Why would you be in equities if you think they're really expensive? And quite frankly, equities are really expensive right now. A lot of them are. So a lot of people are staying away from U.S. equities. You got a lot of people buying emerging markets. You got a lot of people buying Europe. We're just at a really, really expensive market right now. I'm going to talk through some of the technicals as well. Obviously, we have the Fed, right? Fed job is to really lower inflation. So if we still continue to have really high CPI in the 6s and 7s, their goal is 2.5%. So they're going to do what they can over time, over the 12, 18, 24, 36 months to get that down to their goal of 2.5%. And I have not traded. Obviously, I wasn't alive in the 1970s. I was not trading in the early .com bubble. So I don't have any experience when interest rates start to really go up, how the markets react. But, I've studied past charts, how things happen. So let's see what the Fed does. But, their job is to really control the economy. And so my positioning is I don't want to fight them, right? They were pretty loose the whole 10, 15 years up, the last 10, 15 years. So I'm not, everyone made a killing. Everyone did really well in the stock market. All the boomers were invested since early 2000s, doing really well. But now we're at sort of that really high peak component. Are we going to just be sideways for a couple years? Are things getting really expensive? Yes. Is money free anymore? No. We had the whole COVID thing. So let's see what the Fed says on Wednesday. I'm very interested to hear the tone of the language, whether it's hawkish or dovish. Last one was pretty dovish, and we sort of rallied pretty crazy. I'm suspecting that he probably comes in a little hawkish, given how crazy the markets have been in the first 3 weeks of just exploding to the upside. And I mean exploding. So I'm going to walk through some of the indexes here. I want to start with S&P 500, guys. Originally, I posted this chart, which is an extension line, I'll kind of talk through why I'm down a little over 30K on the last sort of 4 weeks of trading. Mainly from sort of small short / a lot of put spreads that I had originally had going into the last couple weeks, which I've went full cash to reevaluate for this week. I think this week could be a good trading week, and hopefully I can execute a little bit better. I'm going to talk through sort of why I was net short. And it's all based on technicals and price action for me until basically the last week when things just got out of hand to the upside. And I think that's where a lot of people just were forced to cover billions to the upside, billions to the buy side. I don't even think it was people way on the sidelines trying to get in. I don't think it was that combined with some FOMOing, but I think there was a lot of short covering that just had to close certain positions out and just due to marginal risk. And so the reality was, we had a top all-time highs in the SPY, S&P 500 at 472, right? You guys have all seen this chart, right? Last bear market rally, we rallied down here off the lows. We rejected off the T off this extension line. Third bear market rally, we rejected off the T off this extension line. Fourth bear market rally, rejected off the T. So right in here, guys, technically, I guess one bear market, two. This would be the third bear market rally. We actually got above this extension line. And now we're also above the 200 moving day average. So it's a little bit, we're at a tricky spot in the SPY because there is an opportunity. There's this whole orange gap here, guys, that could potentially be filled in the short term if bulls continue to press, if buyers continue to press. That's a big gap. That's about a 407 gap all the way to about 420, 425, 427 maybe. And then I think right when we get to this top, that's sort of where you probably want to be taking a lot of profits off the table. If you're really long, you might want to just be hedging long puts in case we start to retest down here again. But this bear market rally is quite interesting because we got right where we ejected at 407 back in September, about 4 or 5 months ago, guys. We were ejected here and went all the way to 350. Then we were ejected here again, went all the way to 370s. So we've had a 1 top, 2 top, 3 top, and now we're here again. We're here again at 407. We're right at that key pivot point. So I think this is why I say this week I think is going to be the most important week for the markets in probably the last 6 to 8 months. Why I say that is because we're at a technical level where we need to explode up, where there's a big move coming in the SPY, or we're going to reject hard and we're going to really get to those 370s, 350s levels in the next few months. And so that's where we're kind of at. That's what I'm thinking about. These are the levels I'm thinking about, and it's all technical analysis. And it's been quite bullish. I'm not going to lie. It's been quite bullish. I've been on the wrong side of the trade. I've said it a couple times now. Been very transparent about it. I've been on the wrong side of the trade over the last few weeks. I thought we were going to reject right off my extension line, as we have every single other time in the last 12 months. So I played in that trend. 1 time, 2 time, 3 times. I thought this would be the trend where then maybe we flush out to 340s, 350s, 330s. I could be a little bit early. It's hard to time the markets. No one can time the markets, right? And Warren Buffett says no one can time the markets. It's just impossible. But as a trader, I have technicals to play me through that. And so I was anticipating the technicals, playing it off the T, and that's how my positioning. I could be a couple months early, could be a couple weeks early, could be a year early. Who knows? No one knows what these markets are going to do, but price action dictates market movement, right? Price action dictates market movement, right? So you just have to provide, right? I don't care if the market goes to a bazillion. I don't care if it goes to 0. I just want to scalp anywhere in between that, right? So this is the orange box here. This is the upside potential, I think, in the SPY up to the 420s. And maybe if we get overbought and really squeeze. But 407 is going to be a tough spot. 407, 410, 405. This is where I think you're going to start to see bears say, okay, am I wrong? Do I take my losses? Or do I say, no, I know I'm right. The trade's not going my way. Let me press my shorts. And I'm not talking like little retail bears here. I'm talking large institutionals, net billions short, billions of dollars short. There's a tons and tons of short pressure out there. So I'm going to see this week, over the next couple weeks, I think you're going to see a lot of pressing, a lot of bear and bull fighting now. I don't think it's going to be an easy walk up here. So I think this level, all in here, is going to be some serious sort of headwinds, sort of resistant levels technically. But I do think there's an opportunity to get to these FOMO levels in here, and that's where I'd be starting to maybe them start to scale into some shorts, some long-term puts, hedging long positions in this orange box zone. Because I don't see with, obviously increasing rates, Fed trying to slow the economy down. We're starting to see data that the economy is really slowing after 10, 12 years. We're slowly starting to see it come down. So I don't necessarily see how we can maybe get up here, but, the market surprises people every day. Let's look at the QQQ. I call this the risk on sector. This thing has been on a tear to start the year, guys. From down in here, from the 270s, we've been face ripping. We're almost at around 300, guys. That's almost a potential 10% move, 79% move, right? Orange boxes are categorized here as in the profit zones where we could get into that range. I substituted as 2 potential zones. So the first zone being the gap fill up to 308. The second zone on the QQQ, which is the NASDAQ, up to about 331 if things got a total risk-on environment. What I mean by that is Fed says, we're going to pivot or we're going to lower rates, or I don't think any of that's coming anytime soon. I don't. But if there's some magical reason that they say they're going to pause, or that they say, We're going to lower rates now. These are the levels in the QQQ I think would be everyone flooding into the QQQ, and that's where I think you could potentially get a rally if some of those things start to occur. Dow Jones, but keep in mind the QQQ is fully underperformed, right? So if we go to our line here, extension, top wick, top wick, top wick, top wick has done exactly what the SPY does, but the QQQ is now sort of trying to break out of this bear market channel. If we break above sort of this level here, I think you could fill the 308 gap. And that's where sort of I'd look to be right in here on this, where they sort of collide, 308, 310. And that's where that first zone would be for me for a profit taking area or a target level for the upside. Hopefully these levels are helpful. Definitely write them down. It's just all just technicals based for me. Just throughout extension lines, you'll see a lot of technicians on Wall Street. You know, a really good technician I follow that you guys could also follow is Carter Braxton Worth. He's been a Wall Street technician for like 30, 40 years. He only trades market technicals. Really brilliant guy. Highly suggest checking him out. Carter Braxton Worth. You know, he does a lot of charting as well. You know, so that's the NASDAQ. I want to look at the Dow Jones because this has been in a bull market the entire time we've been selling off in the SPY and QQQs. The orange, obviously the orange box here representing the upside I think we have in this move. But I do not think the Dow Jones is attractive, anywhere near attractive at these levels. None of these names really have sold off at all, quite frankly. And interest rates have doubled, almost tripled. Cash is now way more expensive. Dividends are really high. A lot of these names do have a ton of cash, so you have to do, it's different than 2008 or .com or 1970s where these companies didn't have as much cash. All these companies doing record buybacks, so there is a lot you're fighting against here, but I just don't see how earnings are going to continue to empower a Dow Jones Industrial move to all-time highs. I get it, everyone's been hiding in these names since the sort of market downturn has happened, but the outperformance is quite astonishing. But for me as a trader, right, if we hug above these levels of like 320, I think if we get below the Dow Jones of 320, I think that's where you have all this downside gap opportunity if we get below sort of this 325 level. And this would be the extension line, guys, going back into the bear market sort of rally, bear market zone, right? So Dow Jones above here it's sort of like a no touch. But once you get below this level here, guys, you have this whole opportunity to potentially go and retest those lows, which is why I've been really analyzing the DIA, but it moves much slower than S&P 500 or QQQ. It's not as fast paced. The companies move slower. The premiums are much cheaper. But longer term, if you wanted to play sort of a downside in a market potential, 6, 7, 8 months out, 3, 4, 5 months out, puts potentially, if we continue to rally, and the Dow Jones would be a play somewhere in here. And I think this whole area is where your potential downside could be for a nice retest or gap fill down. So that's the Dow Industrials. So those are the index coverage, guys. We're at a really key pivot point, right? We have the FOMC Wednesday. Premiums are going to probably go up. You'll probably see a little bit of a VIX spike. And then we have all these huge earnings this week I'm going to talk through. It is like I think it's like a third of the S&P or something reports this week. It's something pretty drastic. So we're going to see earnings, FOMC. We're going to see VIX crazy hedges. We're going to see huge inflow outflows. We're going to see monster option contracts. So be focused this week. This week's probably going to be one of the craziest weeks of the year I'm expecting. Hopefully the volatility will be there. I love to see some awesome volatility and some shaking the boots this week because that's where I think a lot of us traders trade well. So I'm going to jump into, that was the first topic. We did index coverage. The second topic, I want to talk through some of the themes last week I started to develop. I was alerting the ARK. I saw some really unusual buying in the ARK, like 80,000 calls that expired Friday at 40 strike. And it's funny, ARK actually finished above 40. So, when you see a lot of these unusual interests, right? When ARK's trading 37, 38 a share, it was clearly a risk-on environment last week for whatever reason. Things actually didn't pop like I thought they would on Thursday. And then Friday, it went mayhem. Coinbase went up 15%. AI went up 17%. PLTR, Palantir went up 8-9%. BuzzFeed, mentioned in the 160s, ran to the 370s, 380s. Microsoft didn't do much last week. Just a sideways week. Had, I thought, in my opinion, a terrible earnings report. And I'm not even sure how it recovered off those 230s, but that was quite impressive to see. So we had a lot of the AI themed stuff with the ChatGPT, all that stuff going on. If that continues, I have a few names I think to keep on the watch. I wanted to take a chart look AI, we're sort of in this gap now, guys. This is a very oversold name all the way from the hundreds. Obviously, it's maybe been overbought in here in the hundreds, fine. Even if you give it relative value in the 80s, 70s, 60s, 70s, 80s, cool. It's still below 20. So I think in terms of technicals on ticker AI, and obviously the ticker is AI, so it is AI themed. You had about 23 million shares trade on Friday, which is the biggest green candle we've seen maybe ever in this name. So keep an eye. The gap fills you have till 20 and then 23. So there's a lot of upside potential on this name if we continue momentum. So that's another 20-30% potential upside on this name. Keep in mind, those are your levels. 20 here, and then you have a 22, 23 spot up in here. So 20, then 20, 22, 23, maybe scale some out at 20, then here. Stops, in terms of stop losses, I'd probably put it middle wick in here, maybe in the 16, 15 zones. If you're already in this name, that's probably where I'd be. If you're not in this name, maybe look for a pullback before a leg higher. But this is the name I'd probably manage risk, and I'd probably be playing it through equity, not so much options, because I think they are a little expensive. I'd have to go back and check. This is ticker AI. So keep an eye on that. 20 and 23 would be the next resistant levels. It's just hence maybe a profit taking spot. PLTR chart is not as clean as the AI chart I just walked through, but it is a very oversold name as well. This is a name that actually may have more potential to the upside, given that it hasn't run as much as AI has. How I'd look to potentially play this one is maybe some longer calls. Maybe out a month or two, if the risk on trade continues, guys. If it's like, oh my God, mania risk on markets again, this is a name I'd probably look to try and scoop some calls. Could maybe see the 8s to 9s get filled, 820 to 9 gap filled here. And then we run into some headways in here. It closed at around 750. So, there's some 10, 15, 20% opportunity upside in this name. But it's not as clean as the chart as AI was. It looks a little bit choppier, per se. This is a name, obviously, I'd really keep my stop losses tight if I ever trade it. And I'll be, sort of hedging appropriately and sort of risking on it, apparently. So, okay, so that's PLTR. The next name I want to talk through is BuzzFeed. And I want to go through what I always teach guys, which is price action. Okay, so I'm going to talk through price action. Because a lot of people are like, well, Spud, I still don't get what price action is. You could have been studying my videos over the last year or two, and I talk through what price action is, okay? Price action, I don't use all these jumbo mumbo indicators. I use VWAP occasionally. That's about it. Everything else is candlestick and what I call price action. How I'm going to talk through price action is, what I mean by price action is price action dictates where the market movement happens, okay? Strong price action potentially means, in short term, for me at least, is, let's say a strong name comes out with a news catalyst like BuzzFeed, Meta to invest in BuzzFeed, blah, 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 there was some like ChatGPT news, blah, 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 something like that, right? Or AI, whatever news, right? This name sort of gapped up, and I'm going to walk through the exact time frames because I trade off the 5-minute chart, right? And so I don't care what happened at 90 cents. I don't care what happened at $1 or $1.10, right? What I do care about is this huge inflow out of nowhere, 8 million shares, 9 million shares, about 10 million shares in 3 or 4 candles. And when I saw this move happen, it was a 3 or 4 candle move all the way to 194. And I saw this monster volume alert. And to me, that shows such strong demand in this zone that buyers want in at this level. So that's what I mean about price action, right? I don't care what happened in here, guys. There could be some nice volume, yeah, and it's sort of dead. It was dead, and then bam, out of nowhere, millions and millions of dollars are being bought, just millions, right? So I'm like, okay, something's going on. And for me, in a small cap, med cap, in this market cap, I think is 300 million. So there's some good potential opportunity up and down on the name, right? But when there's what I call strong price action, get a 1, 2, 3, 4 tick move. Okay, I want a little bit of a cool off. So I alerted the 160s as a potential level, as sort of watch this level for a potential breakout. And we just started to just see more volume come in. 5 million shares, 3 million shares, 4 million shares, 2 million, 4 million, right? 4 million again. And then we started to just see even more volume come pick 4 million, 5 million, 3 million, 5 million, 4 million, and just started picking up the volume, right? And this is sort of a staircase, right? You get a base level after all this buying, and I don't care. Guess what? As a trader, I don't care if I missed most of this 20, this looks like a 35% run in here. I don't care if I missed that, Because if this is the first start of the run, which it was, look where the run went to, all the way to 420s from 160s. I don't care if I missed all this run. If the action is still strong, I'm okay buying a stock up 20, 30, 40% if it can go another 10, 20, 30, 40, 50%. And so I'm just here to scout momentum in a particular setup like this, right? So we get a ton of buying, then we see consolidate. We get the final dip down in here. Right down in here in the 170s. It actually hit 160s for a while. This was down to about 164. This wick's actually a little off, 169. It was actually down to like 166 on this wick in here. And so 160s was sort of the volume alert. So if you jumped in here, you could have quickly rode this puppy up to 220s about 10, 15, 20 minutes later, which is a 10, 20% move. And then it sort of just kept going. And then it closed really nicely as well. It closed around 2. So if you're in the risking off 160s 2, maybe you have your stop a little above your entry, right? The next morning, we sort of just started to really hit the gap up. And volume really started to come in again. And this went all the way to 420s. But it's funny how things work because if you take a look where this name bounced into close and held. See this wick right here, this bottom wick, $2? $2 was then the new support when it closed. And we never saw $2 again the entire next day. So to me, that shows the ticker's still strong. Yes, this has had a crazy run off 1 to all the way to 370s. So I wouldn't be sort of FOMOing it up here. But if you get a nice pullback back down to like the 250s or 270s, it could be an opportunity right off these levels to maybe retest those 4s. So this is going to be still a top watch given how strong, as I said, the price action has been. It is a smaller med cap name, 300, 400 mil market share. And it is down quite a bit on the weekly chart from looks like IPO or SPAC, whatever that was, maybe about $10. So there could be some potential left in this name, guys. But I just wanted to highlight some charts of what price action looks like, right? You see a move, then you see a consolidate move over 5, 10, 15, 20, 30 minutes. And then you see, bang, new highs. And then the new highs here, which got rejected, broke out. You start to see covering in here. Sort of buying the consolidation and then selling the rip in here, the 10, 15, 20, 30% rip in here. Then you're sort of out watching it. Maybe get the pullback here, take a stab, maybe try and look to sell up in here, right? So there's always opportunity on a strong name. And when I mean a strong name to the upside, that's like if a name's not really dipping or it is dipping, but every time it dips, it gets bought up. That's strong price action. So it's like dip, bought up, dip, bought up, dip, bought up. And this is a 5-minute chart, right? 5-minute interval chart. Dip, 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 bought up, and then bang, huge volume candle. So that's strong price action. That's what I look for when I'm day trading, sort of the 5-minute interval zones when I'm trading a smaller med cap, 100, 200, 300, 400, 500 million market cap. Obviously much different price action in large caps, right? So that was the AI theme. Another name maybe to keep an eye on. Is this name. Just saw it, had a good week. Unusual volume on Friday on the daily chart. Not as clean as a chart, but it has some gaps to 220s, 240s in here. SOUN, another AI theme. I've known nothing about it. Let's jump now to the EVs. Lucid had a crazy Friday. Halted, I think, 3 times during the session off of a rumor, potentially the Saudi fund, rumor to buy out its rest of its stake in Lucid. Which is quite interesting. This thing got really cheap, Lucid. It was being sort of sold off, shorted pretty low. Had a squeeze day. Pretty wild. 200 million shares traded. So a lot of liquidity, guys, traded. Yeah. So this is a name to keep an eye on. Has some gaps up to the 14s, maybe 15s again. So if we start to see those levels, maybe that's where maybe scale some out. It would be a 200% move off the lows. But yeah, keep an eye on Lucid. Obviously, it was some crazy price action Friday, so I'm sure they'll still have a ton of eyes and volatility this coming week. Rivian, another EV name you want to keep an eye on, hasn't had that much, but I highlighted the chart if the EV theme continues. So if AI stops or EV picks up, this is a theme that maybe you can play out. Rivian has some gaps up all the way to 22, 23 zones, currently trading around, $19. So it has some opportunity here to the upside, another 10, 20% potentially in here, 10, 15%. So keep an eye. That's sort of the levels in here I'd look at. Anything below sort of $18, $17, $16 is sort of back in that downtrend zone. Doesn't have as much range as Lucid did. Tesla, everyone's asking me about Tesla. It got really cheap. There was a lot of marginal selling in here around the 110s, 120s period, even the 105s. And it did get really cheap. I wanted to get pretty greedy on the name in the 80s, 90s if it got there, which it never did. It may get there. I don't know. But, 170 is for sure a FOMO upside target. And, this is up like 30, 40%. It's starting to get to a level here, guys, 180, 185. If it touches 200, that would be a double top. Almost like a year ago. Almost a few months ago. I think if it hits that 200 line, you may want to start to take some off the table, or at least maybe buy some longer dated puts. This is a sort of going to be a tough level, I think, for the stock if we get up to 200. That would be another 10% higher from here, which would be an almost 100% move off the lows in only like 3 weeks. I know that's so crazy to think about. Almost double market cap from 3 weeks, but that's how fast this name can move. So a lot of opportunity. There's a reason why this name is the most traded option contract value, because of the volatility. I think traders really like it. That's Tesla. And then a small cap name, Mullen. I know it's a very shorted social media, hype name that a lot of people talk about. This is an EV name. So if the EV theme continues, Mullen is holding this sort of 0.30 level base. Let me give you the quick targets on Mullen here if you're a small cap lover and sort of love those penny names. 0.41 with a double triple top around, let's put it here. We got the top wick, about 0.60. So if we break out over 0.48, I think there's a nice opportunity for a 20-30% gap fill in here. But that key level to me is sort of breaking this 40 zone. And until it breaks that 40 zone, I'm probably a no toucher. If they were to break above 0.40, I'd like to touch and get in this maybe and sort of gap up into these 0.40, 0.60 level zones. So once it sort of breaks out here, this is your gap where I think you can make a nice move. But right now it's sort of just stuck in what I call a no man's land technically. So yeah, that's Mullen. It's like a speculative EV name that trades a ton of liquidity. Easy to get in and out of this name. Tons and tons of liquidity. Other names to look at, right? We talked about BuzzFeed, SOUN, Mullen. Another name, Avaya, chart-wise, holding up as well. This used to be a mega cap S&P 500 stock, I believe, has 190,000 global customers. This used to be a mega technology company. I knew it. They provide a lot of those sort of wireless contact center phones that you use in old school offices. Currently not sure if they're going to go bankrupt or not. Has a ton of debt, so they're trying to find a debt financing partner. But the chart's sort of here. Same thing. This is a name where if we start to get over 40 cents, another name that has a gap all the way up to almost $1. And I continue to watch it every week, and it is choppy. It's not as clean. But it is up like 30% over the last few days. So it could sort of get that final push maybe before you see a bankruptcy news or delisting or something. But there is an opportunity potentially for this name to sort of skyrise in here and really take a move up. So if you start to see 0.40 break, this could be an opportunity all up in here. Same sort of gap fill. This is for those small cap, not even small cap. These are for those sort of sub one penny lovers. This is a huge company. So I do think there'll be some things that materialize over the coming weeks / months. Whether that's a bankruptcy, whether that's debt financing, whether that's something going on. So keep an eye on this name, AVYA up in here. Similar to like your sort of Carvana type, if you were to say. Okay, cool. So we did the AV, we did the AI, we did the index coverage, okay? Now let's talk through the fourth topic we have is the earnings. So let's go talk through some of this earnings stuff because I think it's pretty important to sort of run through some of the earnings. Thanks to Earnings Whisper, good sort of count to follow. They always post earnings and stuff. Really easy to sort of just take a picture and navigate. So I highlighted in red here some of the key important earnings I think for the week are. Obviously, there's a zillion more that aren't on this actual sheet. But we have some really big ones. Starting on Tuesday, you got ExxonMobil. We have UPS, AMD, Snap, Pfizer, Caterpillar, McDonald's, Spotify, Match Group, which is sort of the Megatron in dating apps, which is a key sort of I would say like a risk-on retailer sort of type. For the consumer, like are they spending money on sort of data apps? Are they spending? Are we seeing advertising spend here? What about chips? Sort of gas and energy. This is shipping. Huge biopharma and sort of scientific. You got Caterpillar, huge industrial name. So and then you have sort of so you get like low end consumers. You have food and beverage here at McDonald's, and they have Spotify, like a premium music brand. So there's a lot going on Tuesday, guys. We basically have everything under the sun tapping on every single industry, right? So this is going to be an interesting Tuesday. Then Wednesday, guys, we have, as I said, we have Powell, we have FOMC meeting, what the rate hike's going to be, plus some more earnings. Thursday, we have absolutely Megatron, Megatech, everything you want to think about. Thursday after close, we have sort of everything going on. Amazon, Apple, Alphabet, Google, right? Ford, Qualcomm. Qualcomm's a sort of a mega cap chip maker. Starbucks, which I'm going to talk through. So you have huge names on Thursday after close. So between Powell presenting on Wednesday, Monday through Tuesday, guys, and I'm going to talk through my plan, really. I might as well jump in here. Monday or Tuesday, I think it's going to be really choppy, even maybe early Wednesday. So I'm not going to be really putting on risk or positions Monday, Tuesday, maybe some small scalps. Wednesday pre-FOMC, given how much the markets run into this, I'm probably biased to maybe play some very small upside strangle versus more size, longer puts duration strangle. And what I mean by that is maybe I'll be looking for like March puts on some specific names or even the indexes alone in the SPY. Maybe like a 380 or 400 puts in the SPY for March, or maybe followed by sort of Thursday, maybe checking some of these names like an Apple puts or an Amazon puts or Google, or whatever it may be. Maybe putting on some more risk in case if you're really long in this market, maybe you want to hedge some bets going into this, given how much things are up so much. Then maybe having some small out of the money calls. But I think playing it out a couple months is sort of safest. I don't typically like to play lottos this week because it's so crazy. And a lot of times, I'll lose on the lottos because of how much things are swinging up and down. So I think longer duration sort of options would be a little bit better to play a lot of this. Maybe February 17th strike if you have a 12, 15-day window. Or you just can play the March or April or June's if you have a longer time frame. We give yourself some more time for moves to potentially happen, right? But keep in mind, we've rallied so hard into this week that, how much upside can you have more? How much more upside can you have, right? So that's how you have to think about some of these option names and some of these charts. And we'll dive into some of these. So we could start with McDonald's, Starbucks, AMD is some of the names I want to start with. McDonald's, guys, trading close to all-time highs. Does it get here before coming back down here? It might pop over. 285, 286, sort of that sort of trend line. 280, 285 would be sort of your levels on earnings this week. On Tuesday, I think 280 and then 282, 285 would be your upside levels. Your downside levels would be about 260, maybe 250 if earnings were really bad. So that's McDonald's for you. That's Tuesday. Let's go through AMD. Chip name had a couple downgrades. Hasn't been participating as much, guys, AMD, in the chip craze and chip run. But it is still trading above this horizontal line I drew back in early 2022. We have one top, two top, three top, four top. We have 4 or 5 top at around 77. It's really had a lot of trouble in the 77 zones. NVIDIA's been on a tear, of course. The AMC downside could get to the mid to low 60s again. So keep an eye here, guys. This is a name that could underperform the market. It hasn't been participating as much as a NVIDIA or other names have been to the upside recently. So keep an eye. That's AMD. Snapchat sort of fits in this advertising bucket. Has had some really nice risk-on days recently. This name could also be sort of baked into the move. So keep an eye on that name. Let's look at Meta. Meta has been on an explosion run from the 90 level all the way to 150. It's basically up 70% from its lows. This is another name that, earnings better be freaking really good, or this name could really start to reject down. So they're really pricing in a strong earnings report here. They've been doing a ton of layoffs. They've been cutting spending. So my guess is earnings could come in line. So keep an eye on Meta. They have earnings Wednesday. There is a gap fill up to the 168s. That's maybe where the market wants it to go. So keep an eye on this level here, guys. 165, 170 ticks. And this would be the upside on Meta if this name continues. Downside, I think it got downside to about $1.40. And those would be levels for earnings, 140 to 160. That's how maybe I'd look to play a strangle on this name if you're an options guy. But I probably wouldn't play same week. I'd play a week out. So that's Meta, guys. Then there's another one that you guys may not know that has earnings this week, which I kind of am watching, is Align. This is Invisalign. I'm not sure if you guys know from like Invisalign, the braces. So it's like not real braces. It's like the plastic that sort of center your teeth. This is Invisalign, so keep an eye on this one. It's down a lot from 700s, lower float, good market cap, about 20 billion market cap. Has a really nice chart. From its last earnings report, though, this is what I'm looking at. On its last earnings report, this name dropped 18% from the 220s. And we're way above that now in the 270s. So, and then we're also hitting a double top rejection here at 270. So this is a name I actually be looking to maybe scale out of into earnings / maybe try some longer dated puts. And the strike price I'd potentially try here maybe in this plan is see how it performs this week is 250 for March. So 250 puts for March maybe potentially is how I'd look to maybe try and play this name. PFE Pfizer, there was huge option put buyers coming in on Thursday, Friday of last week, guys. And they were buying, I think, the 42.5s or 43s. Maybe it was even the 41s. I'm not sure. I saw it on actually CNBC options action. There was a ton of put buying here. And I think they were betting that it'd be down 4%. It's down another 1%. So basically another 3% down by earnings next week, which is in the 42 zones. That's a nice sort of area for this. But this name has been seeing some really heavy selling out of the blue lately. And it's really been underperforming the market, and it's had such a great run, but it's now starting to sort of get into this downtrend, and that's Pfizer, PFE. So keep an eye on PFE, Pfizer. This name could have some potential downs to the 42s. There's some big put buying. I'm not sure if someone knows anything, but a big institutional buyer there came in and swept up. So let's see if this name does continue back down to the 42s, 41s. What else, guys? So that's earnings to cover some of them. Now let's jump into Thursday's earnings. Amazon, quite an interesting chart. I put the extension on Amazon, sort of these top wicks in here, right? So all-time highs, never got out. And it broke down here again, broke down here again. We haven't even got up to this sort of where the bear market rally is. So Amazon is in a severe bear market chart zone. I mean, it is underperforming Apple. It's underperforming basically everything. Maybe not Meta, but even Meta's been on a tear versus this since the start of the year. I mean, it's up a little bit. We have some resistance at the 102, 103, 104 level. But guys, there's a lot of opportunity maybe in here. So if Amazon's earnings are good, you could get some upside to the 110 level. 110 and sort of 92 would be a strangle for me as a potential trade idea. And I think you're going to see a lot of range on Amazon after earnings, guys. So 92 and 105, 110 maybe would be sort of my levels here for this name. That's ticker Amazon, AMZN. Apple. This is one everyone is bullish on, 90, 95% of the street. Everyone just remains so bullish on this stock. It's had a beautiful sort of, if we look at it, a really nice from 2019, a really nice 60, 90. It's had about a 300% move in 3.5 years, and it's put on a $1 trillion plus market cap. So, I mean, it has performed since 2021. It's still above this 125 trend line. I'm actually thinking on this name, this orange box on this name is the area I think where this name can see this year. And what I mean by that is I think this name needs to retest the 105s, 110s level before it maybe can go retest those 180s. And it's on a tear recently, the last 3 or 4 days. But if you can recall, they had some major issues in China, major Foxconn issues. And in my opinion, I don't know how much that's going to affect their earnings. Also, the slower consumer. I know there wasn't as much demand this year. So we have to see all the demand, supply issues, what's going on. Is demand still really high? Is supply really low? So we have to figure out, I think, on earnings. But for me, this is either a no touch or maybe playing some February, March puts at maybe the 140, 135 strike. I would love to give myself on a name like this in case it does beat earnings. Maybe another 3 to 5 weeks of potential opportunity for it to fade 5-10% from these levels. And I think if it does break the 130, 125 zones, I think this is your gap where Apple can finally sort of liquidity flush out and people really start to take profits. And this is where I think maybe you'd try and go long maybe at around the 100 level. I still think Apple at around 100 is a nice spot. I just think in here it's crowded. It's a really crowded trade in the 130s, 140s, 150s. I just think everyone's it's just trading choppy and sideways in here. There's still a lot of analyst targets in the 160s, 170s, 180s, and we're right there, really. But I just still think I'm biased towards the downside in this name, just given its run and how bullish everyone is on it. I think there's a surprise to potentially the downside. So keep an eye on earnings. That name is Thursday after hours. How I look to potentially play this one, as I mentioned, is maybe like 135 March puts, just for like a risk off. If you're really long in this name and you're up a few 100%, you could potentially buy some longer puts to make sure that you make some money on the way down as well with your given equity. So that's another way you could potentially hedge or play this name. Speculative name, FCFS, hit our insider selling bot. We have an insider selling bot within the Discord, and we saw some major block sells from insiders here on this name last week. Know nothing about the company. It looks like it's sort of like a pawn shop. Big company, though, $4 billion market cap, I think 1,200 employees. One insider sold a little over $7 million worth. Another insider sold over $8 million worth. And then we have earnings coming up on Thursday. Highly speculative for me. But maybe I'll just dabble like, I don't know, a couple small grand in here just for some longer puts, maybe a month out, a couple weeks out. Probably around right in the money, maybe 90 strike or 85 strike. Just to see if maybe something bad comes in guidance or negative earnings, or I don't know, maybe there's a re-rating, something happens. But I might just follow those insider sells, and those are some big block trade sells to the outside. Obviously, it could just be, they can only sell and buy as a specific date or quarter, and maybe they needed the capital for other things, but could easily just be that. But I might just try a hunch and maybe trade some puts. This is just a totally speculative name. It's trading around all-time highs. There's insider selling, so maybe I can play down here to the low 70s if it gets ugly, maybe even the 80, 82 level. So I'd probably look to maybe trade some puts. Tiny is just sort of a lotto idea. FCFS, big insider selling there. So maybe something going on, not sure. But yeah, so those are the names I'm really going to be zoning in on. Apple, Google. We haven't talked through Google, actually. I'm going to talk through Starbucks and Google real quick. Google, tons of antitrust going on here. Charts underperforming. As I said, it's in this zone. Last time we spoke about Google, is trading up in here in the 120s. And finally got 20% cheaper. So, if we get below here, maybe we get a flush to the 70s, 80s if things get really bad. But right now, it's one of the cheaper mega cap stocks. And as I said, it needs to break 90 for it to go lower. Needs to hold, like 100 for it to retest 110. So you're in that. Google's a tough level. I think a 110 call / 90 put spread, maybe 2, 3, 4 weeks out could be nice. So that's a name you maybe want to look at as potential strangle. Big name here I want to and I've actually lost a ton trying to short this, Caterpillar and a few other ones in the Dow and / SPY. Starbucks, guys. I know everyone's probably thinking Starbucks. Here's the weekly chart of Starbucks. I mean, just like 5 months ago, right? 6 months ago, this name hit like 50s. Sorry, this name hit 60s. Now we're back. We've almost doubled the money in like 3 or 4, let's see, so 8, 9, 10, 11, so 5 months. We've practically doubled off the lows of Starbucks. They closed their stores in Russia. They weren't open in China. Costs are flying and increasing. Yet we just continue to see accelerating buying in this name. And it's starting to get to a chart level here, maybe 110, 112, 13, 14. I think 115 is really where I try and short this name. But this is another name that reports Thursday after hours. I think the PE, guys, is like 33 on this name. Starbucks, I know, Starbucks, 33 PE in this environment. $7 coffees. I mean, to me, it's crazy. But, obviously everyone still buys their coffee every day, and Starbucks is that sort of brand, sort of high-end consumer name as well. So it's a little tricky in here, but I think for me, the next 3 to 5 quarters need to go perfect just for them to hold this PE. So for me, I'm going to be biased, and I'm going to take the short side trade on this trade. And how I'd look to potentially play earnings is maybe the March 17th or 20th strike, whatever that is, the monthly strike, maybe at the 100 level. So maybe buy 100 puts for March, just because if we get a 3 to 5% pullback in the name, that will be a nice green trade. If you get anything below a 5-10% pullback, you start to get in the 90s, and then you're deep in the money for March, which could be a nice 2 or 3 bagger. These premiums on Starbucks are very cheap for a name that actually moves quite well. On the daily chart, just to show you guys, it has some nice moves. It can move up or down 2-3% a day, and we've seen that. So Premiums are pretty cheap, guys, around 30% on this name. I don't know how expensive the premiums would be for earnings, but I wouldn't play the lottos for earnings on a Thursday afternoon. I'd probably be playing them for like February dated 17th, give it a couple weeks maybe in the money, or even down it for March. As I said, it is getting to where it really sold off before. We sold off from 113 all the way down to 91 in like 8 or 9 sessions. But these are names that don't fly like tech does. You need to give yourself some more time if you're long or short for a move to happen, to breakout zones to the 120s or a short back down to the 90s. So that could be a potential strangle name as well if the premiums are cheap. That's Starbucks. So we've really talked through a lot of the earnings plays, guys, sort of the levels, up or down 5 or 10%. And I think this is an earnings season where I think we're probably going to see some vol this week on some of the earnings. And I think you're going to see some surprises like, wow, these companies are doing really well. I think you're going to see some companies that you're like, oh my God, holy smokes, how did they miss so bad? Like an Intel on Friday. I mean, Intel on Friday used to be the world's leading chip chip player. And it literally looked like they were like a small cap stock. They got absolutely demolished by every single analyst on the street and sort of funded, and everyone was disgusted by the earnings. So, there's going to be names that really underperform. There's going to be names that obviously really outperform, like you've seen with Tesla, like you've seen with Intel to the downside. So, and I think that's sort of what you're going to start to see people's portfolios start to really, you're going to see the breadth of moves over the coming quarters on a lot of these names. So that's earnings. What else do I have for today? Let me jump back into the stream here, but hopefully this is like really helpful. We've walked through sort of a lot of the earnings levels, and there's just a huge week. I'm going to reiterate here. We have Powell Wednesday. I don't plan on putting on really any risk or plays till Wednesday morning. And as I said, guys, I'm going to be playing multiple weeks out. So if Powell comes in really hawkish and the markets move down on that, then earnings aren't as good. You sort of get that double powwow bear punch. If Powell comes out dovish and earnings are good, you get that double bull punch and we just face rip squeeze to the 420s maybe potentially in SPY, right? So you have to maybe have those zones in your mind, like maybe 390 SPY, 395 SPY for downside this week. Upside, maybe you have the 415, 425, right? If things get crazy. So I think you're going to start to see some really big option bettors come in both sides of these trades. But I'm happy to do some quick Q&A for the next like 5 or 10 minutes. If you guys have any questions, maybe I can help answer. If you guys want to shoot them in the right-hand column. If not, you can always check us out in the premium Discord. If you think this information, a lot of the content's helpful, we have some awesome traders in the Discord, some really great members and awesome like-minded. We try not to miss a beat. There's a lot of moves. Obviously we don't win all the time. We can't. It's the nature of the business. As I said, I've had a red month to start and it hasn't been fun, but been on the wrong side of the trade mostly. But looking to sort of categorize that and have a well-performing next couple months, and hopefully we see some more volatility in market movements. But yeah, you guys can check out the Discord if you'd like. Obviously, subscribe here. This is all free content. Happy to run through these sessions every sort of Sunday or two. And do like some live voice chat here. So if you guys have some questions, post them on the right, and I'll try and answer them as best as I can. And that could be anything at all. You guys can ask. Try and refrain from asking particular questions about a specific ticker. I don't want to waste everyone's time on the live stream. We got about 100 viewers here, so do shoot away on some questions on the side, guys, and I'll try and answer them as best as I can. Shane Miller. How do you determine if that's sells or buys on the options chain? Yep, people could be buying or selling covered calls or puts, etc. You can see if someone comes in and sweeps it as a buy or someone's selling, depending on what sort of option flow software that you use. I typically just like to use open interest, and that's really who's holding. That's really how many contracts are being held at that specific strike. So I look at more open interest as an opportunity to see where a stock is being bet on or where a movement is being bet on, as where the big buyers are sort of thinking things can go. And then I try and make plays off of where I see the open interest, not necessarily the volume on the day, more so what's being held. Hopefully that's helpful. Ryan Walker. SoFi Bank Charter purchase. Similar companies tripled revenue. They have earnings on Monday. Can you go over the chart? Yeah, SoFi had a nice breakout, I believe, on their last earnings. I'll quickly jump into the chart. I don't know much about the name. I do remember seeing they broke out last earnings. Is a name sort of down. I think if you're trading SoFi, 6 is a really key component here. 650 really key. If you get over 650, SoFi's got a really nice gap fill up into the 7s, maybe 8s. But it's got to get over this hunch here. One top, two top. And if you were to reject off 650 here, I think you're still in that downtrend. If you break over 650, you got some nice upside opportunities to the 7s and 8s. Hopefully that's helpful with SoFi, ticker SoFi on earnings. But as I said, it's still in that bear market downtrend on SoFi. It needs to break out of those levels for me to, not even for me to play it, just to see some bull activity. What do you think about Path for AI? Kathy Woods is loaded up on it. I think Path's a great company. Know a few folks who have worked there and whom still work there that actually are on the sales side who just love the company, have done really well. It's gotten demolished. Thing about that company is it's just so high growth where they never cared really obviously about their balance sheet and margins, so it got dragged into that like super high growth, like non-reputable tech name. But it is very, very cheap down here. Could be a nice name for 5-10 years long term if you really love the high growth tech names. This is a sort of a leader in the space. Has a nice gap fill up to the 3 top around the 22s. I don't actually own any or play any of this name. I don't really actually watch it or follow it at all. But it is a nice, really good, growing, fast-paced technology company that does a ton in earnings. I mean, just alone, 260 million, 260 million a quarter here, which is nice. I don't believe they're profitable yet, so I don't know what their EPS is, but it's had a nice move. It has some opportunity in the 18s, maybe even the 20s up here. This would be a name sort of to maybe try and grab if the risk-on mode comes back. This would be a name to sort of maybe jump into. But if risk on is sort of not the trade and the Fed continues to be hawkish and keeps raising, this is sort of a name I don't want to be in the next 6 to 12 months. So that's how I'd look to potentially play or think about Path. What is your opinion on trading supply and demand zones? T. Krosner. Supply and demand zones are really everything. That goes back to and talk about price action, right? If there's a lot of selling, let's just give a really easy analogy. Of demand and supply zones. This is probably a question that all 100 people on the live stream right now want answered, right? Like supply and demand zones to me is where someone or a seller or buyer or an institution or a fund or a retail, whatever it may be, is looking to get in or out of that equity or index or commodity, right? So let's for easy example, let's say $1 a share, right? If you're seeing millions and millions of dollars being bought around the $1 share mark, and it just continues to consolidate around the ones, and sellers can't really get below one, and buyers just continue to accumulate and consolidating on these sort of levels. It's a great chance that that's where there's a lot of demand for that stock, right? Like we talked through this. I think I showed it earlier on ticker just to show you BZFD, a momentum name from last week, BZFD, BuzzFeed. Right? If we go to the 5-minute chart, and I only trade 5-minute intervals, I saw that question below, I'll answer in a second, but right? We had a breakout, right? Then we had to consolidate, so every dip was just being bought up, right? So this would be a demand zone. I would categorize this as a demand zone because people that miss this say, this name's strong, I'm going to buy and consolidate, I'm going to buy these dips to hopefully get a bigger move in here. So this would be a demand zone. Now you want to talk through a supply zone? This would be a supply zone where all the demand in the last sort of 2 hours of buying is now being oversupplied in here, and the buyers want to be out in here, right? That's like 100% move. And keep in mind, this is a fast-paced moving med cap, right? 300 million market cap, right? So there was a lot of movements in here. This would be I'd call this an overhead supply wick, where you get fully rejected, big wick. It's probably like a 5-10% move. And then you start to see some selling, another 5, another 6. And then you start to see sort of that washout flush in here. This would be overhead supply. So where you're seeing millions of shares being sold versus millions of shares being bought. Does that make sense? So that's the demand zone. That's the supply zone. You don't want to be, as a trader, if you're going long, you don't want to be sort of buying the supply zone liquid. You want to be buying maybe if you miss this and miss this, maybe you want to be trying right where it's sort of, there's still a little bit of demand. Maybe that you want to test that demand. Maybe I think it's going to break out the next day. So this is sort of going into 4 p.m. close where it's sort of ripped up higher. Maybe you're saying buying here, saying, you know what? Maybe I think it could retest those 280s tomorrow. And then bam, you get the 280 push tomorrow. Then you see a little chop in the 280s, right? Because that's where it hit yesterday, and that's where sellers want to come in, profit takers, that's where new shorts want to come in at 280, right? And then we sort of just saw the explosion. Same thing again. supply zones, demand zones, right? Now we're seeing higher, right? So hopefully that's helpful. Hopefully the demand zone supply is helpful for you guys. And that comes back to price action, right? Price action dictates market movements. And that's the sort of the slogan I live by, guys. Price action dictates market movements. Everyone could think one thing or do another thing. You just saw that. Everyone's short and should probably be short. The market's slowing down. Rates are flying up. The reality is money's not cheap, and no one's wrong to be short. You probably want to be short this market, but guess what? It didn't make sense the last few weeks. I got crushed, not as crushed as I'm sure many other traders are, but the short trade did not work out the last 2 to 3 weeks, even though fundamentally, technically, everything it may have made sense to be short, but guess what? Price action wasn't short. It was long, and everything sort of got squeezed. And that's what happens. You follow the price action, and that dictates where the market goes. Sometimes it could be not where you think it's going to go. It's what the price action on that specific index name is, where the stock's going to go. Hopefully that's helpful. I only look, Lena, you said price action. You only look at volume and VWAP. I use VWAP from a day trading perspective. Well, that's a 5-minute candle. But yes, I only look at sort of volume price analysis, like in candlesticks. Candlesticks for me are really everything. As I said, as I just talked about, where people are buying, where people are selling. And I look for sort of new strength or new consolidation for like a ripper up or a ripper down if I'm short or long, etc. Hopefully that's helpful. Shane Miller, awesome. Mike Anderson, natural gas boil. Natural gas has fallen off a cliff and got demolished. That's all I have to say about that. I took some losses on that months ago. Thing got absolutely crushed. It looked like there was a low at 18, and I think that things dropped 50% since. So it ran all the way to the 140s or 120s. Nat gas boil's gotten smoked. Let's see. Go over a gap because I always just look for actual gaps. Shea Miller. I talked through gaps early on in the session with indexes and some equities, so check the gaps there. I only like to consider a gap when there's very unusual volume or like 3 to 5x volume trading on a name, and then there's actual gaps where you can fill if the volume continues. I hate people that sort of just throw in these like, oh, it has a gap to X, oh, it has a gap to X, but there's still not a lot of volume. There's no unusual volume. There's no real trend. Every chart's going to have a gap to something, but if there's volume going, unusual, like high volume going in that direction, then there's an actual gap that might be actually filled. If there's the same volume, there's no trend up or down, then, how can you say this is my target on a gap? So that's sort of how I look at gaps. If there's big volume, sort of unusual volume or anything like that, then I start to say, okay, here are my gap targets up or down. Stephanie Shepard, do you only play the 5-minute chart? Yeah, I only play the 5-minute trend lines when I'm day trading, when I'm taking on swings or puts or calls or anything longer dated, multi-week, multi-month. Then I look sort of at the daily, weekly chart technicals because that's more important, and that's where big fund traders and big funds look at, and they take things more long-term approach in some of a monthly perspective, not so much as a daily perspective or minute perspective. Excuse me. So yeah, Stephanie, I play the 5-minute because this is I always tell new traders or even experienced traders, 1 minute and 3 minute for me, Stephanie, is like 1 minute's like heart attack levels. And what I mean by that is it's so choppy. You can get so stressed out so fast just watching the 1 minute chart. 3 minutes, it's like, still like crazy high stress. 5 minutes, it's like, okay, you get a breath of like, is there a big seller in this tape? Is there a big buyer in this tape? Okay, there was some good movement in the 5 minute. And then like from watching 2 or 3 5-minute candles, you get an understanding of like, okay, there actually is a lot of demand for this stock, or you know what, there's a lot of selling for this stock. So that's sort of how I look at the 5-minute chart. Hopefully that's pretty helpful. That's why I use it. 15 minutes, a little too slow because you can't really see what's going on in between the 5 and 10 minutes on the tape. You have to wait a little bit longer. 10 minutes also pretty good, but 1 minute and 3 minute for me is just like a no. I don't even look at it. Hopefully that's helpful. Joshua Welty, hey Spud, do you see the massive dark pools SPY and QQQ 380, 280, Feb 17s? Thoughts on this? Could be a really big hedge for long players, but also could be people betting on a hawkish Fed and earnings coming down this week. I wouldn't think that's very unusual at all. I'm going to guess you're probably going to see a ton more of those kind of prints, SPY 380, QQQ 280 for 15 days out. We're 18 days away from that strike. We could easily see a 3 to 5% move down easily. So I think you're going to see a ton more put buying, I would say, this week because of how big the market's run the last 3 weeks. And that could just be a hedge for longs. But that also could just be new shorts coming in saying this market's very overbought short term. We need to pull back. So, I don't think it's very unusual dark pool prints at all. Steve Elmore, after harvesting profits at the end of the year, what amount of capital do you typically start with the new year? So I'm trading on very small accounts right now. I have been probably the last 4 to 6 months per se. I've been 90% cash and sort of withdrawals, a lot of profit taking early on from 2020, 2021. Lost a lot going into 2022, mid 2022. So that was some hiccups there, of course, that everyone knows about. So, I try and start small. I'm doing like a 5K option challenge, like a personal options challenge that I've been running. Then I have a smaller sort of capital and equity, much smaller, that's trading just like equity stocks and stuff like that. Some options in there as well. That's like my day trading account. So everything's very small. No need to over risk in this kind of environment. And I don't think things are cheap enough to sort of throw in some large cap, some large equity for the longer term, yet for a longer investment horizon. So I'm just sort of trading options, playing stocks, equity, etc., based on flows and where technical analysis is in the market. Stefan Kivoto joined a little late, but you talked about Chat GPT. Yes, I talked through some of the AI stuff and the chat stuff. Just some momentum names, small, large, med caps, previously in the video. Go check that out. Let's see. What else? William Albert, what's your take on prop accounts? Prop accounts, I'm not sure what you mean by that. Like prop trading accounts in terms of like liquidity, or I'm confused on what do you mean by a prop account? I don't know what that means. If you could clarify. Shane Miller, you should be able to replay the video. Yep. Yes, what is it, Steven? Steven, yeah, you should be able to replay when it's done. I talked through, there was a section of AI for about 10-15 minutes. I spoke through some momentum names and some charts. Ticker AI looking like the best chart potentially to fill some gaps. Stephanie, got to run. Thanks for doing this. Super helpful. Awesome, Stephanie. Yeah, guys, if there's no more questions, really appreciate the time. I know we started a little bit late, and I do apologize for that, for the audio bug and some problems there. But looks like there was 100 of you on for the whole time, which is great considering the malfunctions in the beginning. Appreciate all the time. If you guys are looking to subscribe to the YouTube channel. These are all free videos. If you wanted to check out some premium content in the Discord, as well as some sort of live trades that we're looking to take and play and sort of live talk through the markets, you can always check the premium Discord. That's at SpudZone. And our tech team probably posted the link in the comment section. If not, you can feel free to follow me on StockTwits as well as here on YouTube. So thanks so much for the time, guys. Have a good week trading. Plan, study hard. Remember, keep that risk management tight. It's going to be very volatile. Play smart, play safe, and hopefully you guys trade well. There's obviously a lot of opportunity out there in the markets, as we've seen the last few days. Some pretty incredible runs to the upside. So obviously don't be greedy. Greed kills. So trade smart, trade well, and have a great week, guys. And I'll see you guys in the Spud Zone if you're in there. And if not, be good. Awesome. Thanks so much. Appreciate the time. Thanks for jumping on. Cheers.